I joined the Great Lakes Angels as a member in January of 2007, and stayed on as a member for about 14 months, and then they asked me to take over as president in May of last year. And there were, to be completely truthful with you, there were some things about organized angel investing that I liked, and there were some things that I didn't like. Coming from a very horizontal, like I said, it wasn't a vertical place I came from a very horizontal place, I mean, like, you build something from the ground up, and, you're not used to, like, knocking on doors. I very rarely wear a tie. In fact, I may ceremoniously take it off, although I see some ties around here. So, but I didn't like the whole sort of idea and mentality that was not pervasive on the East Coast. The East Coast and the West Coast are very, very different if you've spent any time there at all. In the East and West Coast, you are not in the entrepreneur club unless you've started and failed a business at least 3 times. Okay? I mean, that's the truth. I mean, you don't belong to the club. Out in the Midwest, perhaps where success may have been taken for granted for a very long time, failure was somewhat of a scarlet letter. It's like, oh, we hide our failures and we don't tell anybody about them over here because they're bad and nobody want to talk to me anymore. So, I bring failure head on. Say, listen, if I fail, that's not going to stop me. My helmet is thicker than that. And you try again. It is not a destination. It's a journey. So what I came here tonight at NEPA's invitation was to really talk about angel investing. What is it? How it applies to what you all do, I don't know. Everyone comes from a varied background. If it fits, great. If it doesn't fit, you'll be at least treated to the process of what it is. Angel investing, to summarize, is investment in early stage companies. These companies may or may not have revenue. They might be at the idea stage. They might be at the we've developed a shell of a technology stage. Some of them have already gone to market. But the one thing that's fairly consistent is that the capital requirements to take them to the next level in terms of deal bandwidth typically fall between $250,000 and $750,000 to up to $1 million. And maybe sometimes bigger, and when that comes, we will syndicate with another group, or maybe work in tandem with a venture capital group. Everybody also knows that this is a very challenging economic climate, so a strange thing is happening in the angel capital investment world, and in the entrepreneur world in particular. It's growing, okay? Companies that couldn't get an audience with a VC group because either their sales were too low or maybe their EBITDA wasn't high enough, are now suddenly showing up on the radar screens of venture capital groups because it was too easy to make money for a very long time. Now that it's tougher and the requirements are changing, the cycle of investment is now, the economic cycle is forcing business to now look at the new innovations, look at what's coming next. Whether it's software, whether it's life science, it doesn't matter what it is, but you've got to be looking, in places you wouldn't normally look because the easy bucks have been made, and unless you sold or shorted, the easy bucks have been lost. So hopefully we're a little wiser for the wear, and we take a little bit more of an intelligent approach. So I'm going to run through our presentation to really explain the process of if you have a business and an angel group is where you think you might need to be. If you have a company that would require that type of capital to either launch or move to the next level, this presentation hopefully will clear out what angels look for, what is the process, and what makes a good angel investment candidate. So this is just some of the portfolio companies that we're working on right now. These are all companies that I personally have an investment in, as well as other members of the Great Lakes Angels. Over here we have SalesTrack. They do internet lead management software for auto dealerships. Moola Moola is an online video web sharing site. You may notice it looks a lot like YouTube. The distinguishing characteristic is that the producer of the video is connected to their PayPal account. Once their video gets viewed 4,000 times, it starts to share the ad revenue with the producer of the video, makes it very easy. That's an interesting one in the end, because that came to us initially as Christian Target, but I changed the name to GodClick. I thought that might have a little bit more of an impact. That's a vertical ad placement network that matches advertisers with faith-based, highly trafficked faith-based websites. And it's not about selling Bibles or whatever, selling religious propaganda. It is really for the company that wants to just reach that audience, and it doesn't matter who we pray to, we all buy stuff. So, but vertical ad networks that are online are a very hot growing space now. Maybe you heard of DoubleClick, eClick, ValueClick. Well, hopefully someday you'll hear about GodClick. SameMoi, that's a brand new one. Here's a perfect example of a company that's software. It's not developed yet. It's in the development stage, very early stage. But this is geared towards women and puts your closet on your PDA device so that you can, while you're out shopping, match your SKU of the garment you're looking at to see how many pieces of clothing it matches in your closet, so you don't have to buy 5 shirts and return 4. I hear a few chuckles in the room. How many women in this room have bought more than 1 shirt only to return 2 of them? No? Nobody? Oh, I see. All right. Come on now. Let's get some a little hand raising going on here. All right. How many women in this room have less than 3 pair of shoes? No, it's definitely not getting hands. Okay. Race and Replace is also a pre-revenue stage company. It's in beta testing right now to match used auto part buyers with instructional videos on how to replace them. We seem to feel that in the next 5 years, the used car market is going to have some value. And Television. Television is another internet lead management software play, but where SalesTrack focuses on the automotive vertical. Television is a web-based piece of software that focuses on the enterprise level for franchisors. And that's a little bit about some of the portfolio companies that we're working on. So you may notice a little bit of a leaning towards online software, a little bit of a leaning towards online media. Yes?
Do you miss something about Race and Replace, or did I miss?
Oh no, Race and Replace is a website that matches used auto parts sellers specifically for car enthusiasts. The beta test we're using is Mazda RX-7s. There seems to be, in the 1970s, that Mazda RX-7, there are fanatical groups that, just like the Datsun Z14. Okay, well, not only are parts hard to find, people like to fix the cars themselves. So it's a website that is in development, but it's an example of a company that is pre-revenue and is in beta testing. These 2 companies here are what we call in beta, meaning that they have not commercialized their software yet. So they're early stage bets, if you will, for lack of a better word.
Something like that's been going on for decades. I had a Swiss friend that was actually college studying Cobra parts. When there was a Cobra wreck in Europe, he
right.
Mine scrap. So
yeah,
probably gets the more sophisticated.
Yeah, that's what we're seeing. We're seeing that the next generation of it's not only just web-based companies, but now there's so much interaction online. You start noticing that there are market verticals that unto themselves may represent a potential sales revenue of $200 or $300 million very quickly, and because the stock market and for the foreseeable future, the equity market is not going to lead to a place where IPOs IPOs aren't coming back very soon, and that's one of the most common exits for venture capital. So you're seeing a lot of development in online marketing and online plays, and these technologies are getting acquired by bigger technology. It's kind of like biotech and big pharma. Okay, the same phenomenon is taking place. So this is just I didn't want to spend a lot of time on this, but these are the kinds of companies that we're in now, but it doesn't preclude us from looking at really just about anything.